Okay, hello guys, welcome to the sharpening session for this weekend. Obviously today is Saturday, so the markets, or most of the markets, are closed. Of course, cryptos are still open. And we will just be going through some methodology things, some things that are maybe outside of placing real trades. We'll go through maybe start to finish how we might place a trade depending on how we get on with the questions that you guys have and what it is exactly that you guys want to do. Because ultimately what we want to do is Q&A. We want to make sure these sessions are for you guys. I always have backup topics in case you guys don't have questions. But of course, if you do have questions, please just let me know on whatever chat box you're in. My tech is working today, so I can see all of your chats. So let me know any questions that you have, anything that you're confused about when it comes to methodology or the apps or how we do something or what platforms. Otherwise, I had planned to go through today scans, why we use them, how we can use them to be more efficient, and kind of different things outside of the methodology that we can use to make our trading a lot more streamlined. So I'll go through those things unless you guys have ulterior questions, and then I can help you with that as well. So just to say, I know my head is in the way, but my email address there is becky@traddictiv.com. So you've got that if you need to. There's also tradewithufos.com/Becky. So let me just bring that up and I will show you what it is. So you can set up a free Trade with UFOs membership here if you haven't already. Once you've got your free Trade with UFOs membership, just come down and you can ask a question here. Now, we prefer that you ask questions here because it's in a public setting. Other people can see the answers. Once your question goes in, it will turn up here, and the answers, when we respond to them, the answers will go on here as well. So it may be that the question you have is already been asked and the answer is already there, which means you don't need to wait for a response. Or it may be that the question you have is new, in which case you ask the question and other people learn from that response and other people are able to learn from the answer. So helps the entire community if you ask questions in a public space. We prefer that, and you do that just by setting up a free Trade with UFOs membership. Then you can just log on and do that. Otherwise, you can email me if you'd really like to. Now, part of the Trade with UFOs membership as well is that you'll get recordings to the YouTube sessions that we do. You'll get emails ahead of time letting you know about the YouTube sessions that we've got coming up. And you'll get an email every day with information and statistics and technology on 5 major world markets. So you get other stuff from being in the membership as well, not just asking questions. Okay, so just need to make sure that we cover the disclaimers there, so let's get those up on the screen. Now, disclaimers are, hi Annie, just seen you there on the chat box, nice to see you. Now, obviously with the disclaimers, legally, of course, important that you guys read them, that you understand them, but just to kind of put it in a nutshell, when we do these videos, whether it's on the weekend and we're not even really trading, we're just talking about the different methodologies or different things you can do, or whether we're in sessions where we're actually trading, these are demonstrations of how we think about the markets, of how we use the technology, of how we apply our methodology. You don't have to take it on board at all. You can ignore it entirely. You could take it on board entirely. You could do something in between. Ultimately, that's up to you, and that's up to you guys to figure out what's best for you and what you think makes sense and what you don't think makes sense. So hopefully as we do these demonstrations and we go through it, it helps you guys to understand a way of applying yourself to the markets. But like I said, you're welcome to ignore it if you want to. Okay, so again, let me know in the chat box if there's any questions and I'll stop what I'm doing and I'll answer those. I'm here for you guys. Otherwise, I will crack on with what my sort of desired topic was today. Now, in general, if we want to kind of put it in a nutshell, what the topic is going to be, it's streamlining your trading. So we can do that through scans and we can do that through different filters. One easy way, and we'll start with this first. In fact, actually, before we do that, I just need to explain how we do these things for you, those of you that may not have been in these sessions before. So of course we say hello, and then just to explain, we're simulcasting. That means we are broadcasting on YouTube, on Facebook, on our closed coaching group as well. So we are in different places at the same time. Now, of course, Facebook and YouTube, you guys are watching it for free. And you will get the majority of the session, have access to it. But for those of you that are within our sort of closed community, we will stop simulcasting at a certain point in the session, When it comes to the normal sessions that we do where we're placing trades, it's normally after one trade or so where we've gone through and explained a particular trade. We'll stop with the free sessions and continue that exact same session, but in a closed environment. With sharpening, it tends to be more depending on the questions that you have, and if I've answered one question or explained one topic, and then I'll go to the other one. So I will be cutting off the stream at some point. Sometimes we don't need to do that because of the way the session goes. Sometimes we do it earlier, sometimes we do it later. So just to let you guys know ahead of time at some point, and I will let you know when that happens, we'll cut off the free stream. And for those of you that are inside the closed coaching, you'll get the rest of the session. Okay, righty. So like I said, my plan today was to go through different ways we can streamline our trading so that we're not going through looking at loads of different opportunities all the time, ruling them out. Now, we should be doing, as traders, in fact, if I come back to here, so I've got a little bit of space to draw this, or type this. As traders, we should be making sure we have probability on our side, that we keep our risk low, and that we have decent reward. Those are three things that we really should be doing. Now, a lot of people will place trades for the sake of placing trades and ignore probability. I've talked about this concept before, but I'll expand on it again, that when we're placing trades, we have to balance concepts. So if we're talking probability, if you have loads of variables that need to be hit before you place a trade, that will more than likely create more probability, i.e. that trade is more likely to work. The downside, if we just change the color so we can make that clear, the downside of it is that you have less trades. That's something that you have to balance. If you have very few variables, let's change the color of that as well. So few variables, and that can be whether or not it's what we do or whether or not it's other variables that you add in or something you've already done, doesn't matter. If you have very few variables, you will have more trades, but there you go, but less probability. So when we're scanning through trades, let's say we have very few variables and we're scanning through trades, we could be looking through loads of trades, putting on loads of trades, and yeah, we've got loads of trades on, loads of trades out in the markets, but they're less likely to work, which means we have to be okay with losing more often. If we have very strict variables where it has to hit this and this and this and this and this and this and this before I even place a trade, then again, what will happen is we might spend a lot of time looking at trades but not placing them. We're going to have less trades. But the trades that we do place are going to have higher probability. And again, of course, these are things on a spectrum. You can do a few variables, right? You can kind of choose what variables you want, but those are the kind of extremes there. Loads and loads of variables, less trades, more time sort of wasted looking at opportunities that maybe you don't put them on, but more probability if you do put them on. Or hardly any variables, it's just got to be, I don't know, the auto climate's just got to be up and then I buy it, doesn't matter, don't care about anything else. That would be really an example of really few variables. So you're going to place loads of trades on loads of markets, so your time isn't necessarily wasted looking at trades that you don't put on, but the trades you place are going to have less probability, so you're likely to lose more. So you can balance these concepts. So for us, we have a reasonable amount of variables. I wouldn't say we have loads and loads, but we have a reasonable amount of variables. So we want to make sure that we're trying to be streamlined and effective with our time so that we're not going and looking at 20 different trades or 20 different trade setups, ruling out 19 of them before we place a trade. So we want to try and be a bit more streamlined, which is why we come to different scans and different things that we can do to sort of rule out opportunities before we even look at them, so that it saves our time. So that's kind of what I had planned to go through today. And by the way, as well, like I said on the chat box, Ernie, like I said, nice to see you. Any questions about anything, if you're new to this, if you've seen it before, if you have questions about the apps or the technology or the methodology, anything like that, happy to go through that as well. Okay, so I will get started and I'll keep my eye on the chat box just in case you do have more questions. Okay, so first things first, one really easy way and kind of free if you don't have any, certain brokers or platforms or certain subscriptions and stuff, is to just come to the FX Street economic calendar, and this can help you rule out certain types of trades. Specifically, I would say if you're in Forex. If you're in Forex, then you're exchanging one currency for the other, you're trading currency pairs. So let's say, for example, you are trading I don't know, let's say the euro versus the US dollar, or the pound versus the Aussie dollar, or the, I don't know, Swiss franc versus the yen. So let's say you're trading those things. Coming to this economic calendar that may tell you that, hey, there's a lot going on in the euro today, that rules out euro pairs. So you don't even look at them. You save your time. So I'll show you how you do that. So we just come here, we can go to the date. It's given us a begin date and an end date. Obviously today is the 10th, so let's say we say for a week. For the next week, begin date and end date. For the next week, click apply. We are seeing all of the scheduled news reports that are coming out for the next week. Now, these at the moment have all impacts, which means impact that has no impact, low and medium, to me are not necessarily relevant enough to decide not to trade those things. So we're going to filter now by high impact. That's now shown us on many different, it could be currencies or it could be stocks or markets within those countries, of course. But these are high impact news articles or news reports that are coming out on these or in these countries, which means their markets can move and react to that. It can increase volatility. Now, you may be somebody that actually loves volatility and you embrace it and you have nothing against it and you don't even care if it's volatile. You're just going to go in and do what you do. Fine, in which case don't do this practice. If you're somebody that is a little bit more conservative and maybe volatility, because of the normal correlation between volatility and higher risk, you choose to keep away, then coming here and understanding scheduled reports that could have high impact and therefore create high volatility is a good way for you to say, do you know what? On Monday, I'm not going to look at the euro. On Tuesday, I won't look at dollar pairs. On Wednesday, I won't look at New Zealand pairs. If you're day trading, this is particularly helpful. Obviously, if you're swing trading, your trades last multiple weeks to months, maybe, swing position trading, then this is less relevant because you're going to be on bigger time frames and what happens in a day is not necessarily relevant enough to throw off a trade that's lasting for months. But if you're day trading or short-term swing trading, then this is a way that you can do that. You can come and filter, buy high impact news by the next week or so. And so you've got a plan to say, okay, on these days, I won't trade those currency pairs. You could interpret it differently and say, instead of not trading them at all, you could say, okay, I'm still going to place euro trades on Monday if I have opportunities, but instead of risking 1% of my account, I'm going to risk 0.5% of my account. Or instead of risking 2%, I'll risk 1%. So you reduce the risk that you have on those particular trades because they've got high impact news coming out, which could lead to high volatility, which could increase your risk. You could say, I'm going to place less of those trades. So let's say normally in a day, you might place the euro dollar, euro yen, euro pound amongst other trades. Maybe you say, I'm only going to pick one of them. And I'll pick the one that's got all of the other variables exactly where I want them to be, or something like that. But you can use this to help filter what you look at and what you do with those things you look at. What you can also do here, so we're looking at basically every country here. So we're looking at the euro, obviously the European zone there, the US dollar, New Zealand dollar, Aussie dollar. Again, this is euro. You've got a little German, I think it's a German flag next to it, so specifically coming out in Germany. The US dollar again, and then we have China as well. Now, you might not trade some of those markets or some of those currencies, and so what you can do is come here, go to the country section, and pick which country you want to look at. You can go to advanced filters, and again you'll see it's got quite a lot of countries or sort of major economies that are ticked. But let's say, for example, you say, I don't trade Chinese or Japanese things. I don't trade the yen. I don't trade Chinese stocks or the Chinese yuan, and I don't trade anything in Canada, and I don't trade anything in the UK, for example. Then click apply. Now this list has shortened because it's taken out the things that are irrelevant to you. So again, you can use, especially if you trade Forex, I think it's a very helpful thing because, of course, the currencies of these countries will move, so will their stock markets as well. Let's say, for example, you just trade US stocks. So we do this in our stock sessions. You'd filter by United States, and again, notice that the list has shortened. You're now looking at only high impact news for the United States. So you might say, okay, when I'm day trading this week, I'm going to day trade an hour after this or get out of trades before this. So this is 12:30, this is GMT. So I'm just going to change the time there to Eastern Standard Time. So what you could say, right, we've got news coming out 7:30 in the morning on the US dollar. I'm not going to look at, or on US markets, I'm not going to look at day trading US markets until 9 a.m, for example. You probably wouldn't anyway if you're day trading in the States, but it depends on where you live, I guess, and at what time it is. You could say, this one is at 9 o'clock on Friday, so I won't trade until 10:11 to give it time to have its volatility and have its impact, and then go back to sort of normal market conditions. So again, you can use this to help you filter out and save your time, because you're going to go look at the week ahead and say, right, Monday's fine, I'll trade as normal. Tuesday, I'm going to wait a little bit longer. Wednesday, trade as normal. Thursday, I'll wait a little bit longer. And Friday, I'll wait even longer before I start day trading to avoid these kind of impacts. So you can filter what you're doing and save your time. Now, what else can you do? So these are, like I said, free sort of economic calendar things that you can use online and filter by these different things so that you can, again, be more specific with your time. But then there are TradeStation scans as well. So these are, I had a question about scans yesterday, which is what made me think about doing this today, to show you what they're scanning, how they're scanning it, and why we use them. So I'll show you the one for stocks, and then I'll cut the simulcasting and we'll continue, and I'll show you the one for Forex in the closed session. So when it comes to the stock one, what we look at here, oh, by the way, I should say, anybody that wants these scans, anybody that's watching this thinking, I'd like that scan, or I'd like to embed this into my TradeStation, just email us, support@traddictiv.com, and then you'll be able to get those scans. So just email us, ask us for the scans, and we will send them to you and tell you how you need to integrate them into your TradeStation. Now, if you don't have TradeStation, you can set up an account with TradeStation relatively easily with small amount of money, and then you can just use it to access these scans. Even if you use a different broker and a different platform to actually do your analysis and place your trades, you can still have, it depends on what kind of account you have, but still have a relatively small amount of money in an account in TradeStation and just hold it there to be able to access these kind of things. So with the scan, let's have a look at this first one here. So this first one, if I customize it, and when I say this first one, it's the one that's being highlighted. This scan is specifically looking for stocks, US stocks, that have probability to the upside on a daily chart. That's what this is doing. So what we're looking at here, I've clicked customize, and you'll see here that we're on the scan criteria sort of section there. And I'll go through bit by bit what it's looking at. So the first bit here, it's looking for a close above 15, meaning we want trades or stocks that are over a certain value. You can change that. You might have a different criteria. So you might download our scans and go in and tweak a couple of things. So what this is doing is all of the stocks that are $14.99 or below, you don't even see them. They don't even come up on the scan. Saves you time going through those opportunities because you're not even showing them. Now, why would we pick 15? Again, you could change that. You can make it 10, you can make it $1, you can make it $200, you can make it whatever you want. The theory being that if a stock is too cheap, it's probably not traded very highly by institutions. Institutions are the ones that leave big stacks of buy and sell orders. That's what our app is doing. Our AutoUFO app is looking for big stacks of buy and sell orders. We'd rather get in with those big stacks of buy and sell orders that are institutionally driven, that have banks and funds and stuff behind them. They're more likely to be trading and be in more expensive stocks. Because if an institution that can throw millions at a trade was trading those really cheap stocks, they wouldn't be cheap stocks because they'd put a lot of money into them and it would make them go up, if that makes sense. So we use 15. Again, 15 is kind of like a rough theory here. Again, you could make it 12 or 10 or 5 or 50 or 20 or whatever you want. But again, for us, 15, anything above 15 is good enough to be likely to be involved with or likely to have involvement from institutions. So that's good there. So we have that. And again, you can change it. All you need to do is just literally come in and click on it, and you can type over it and change it. Now, we also want volume the average over 3 months, that's what we're looking for. And again, you could change that to the volume over 1 month or the volume over a longer period of time. But again, for us, if we've got decent volume, in this case, it's over 500,000, over 500,000 trades happening, then it's good enough. It's more likely to have the liquidity that we need. It's more likely to have decent trade opportunities. So again, we do that. You might say it's fine if it's 200,000 or it has to be 1 million. And again, you can change that. But again, what we're doing here is looking for where we have opportunities where we're more likely to easily be able to get in and out. We then have, when it comes to this different section here, these are options criteria that we're looking for. And again, you don't really need to have those things. If you're just looking for stocks, you could uncheck these so that the open interest for options and the implied volatility for the options is not relevant and is not part of the scan. And again, you can uncheck any of them, or you can add new parts to your scan as well. So if you don't have options data and you run this scan, if you don't have options data, then it will come back and basically tell you it can't do that, because it's trying to find data that you don't have access to, and so it's going to come back and say, I don't know what to do. So if you have that problem and all you're wanting to do is trade stocks, it's just uncheck these. If you do have that data and you check these, then what you can be looking at is criteria within those stocks that also have decent criteria for their options as well. So again, a certain amount of open interest and then different amounts of implied volatility, again, depending on what you want to do, you can change that, and how much you know about options, you can change those things as well. Then we have here a close, which in this case, because we're looking for long opportunities, this is looking for long opportunities again on a daily chart, we want a close that is greater than the moving average exponential. The reason we do that is because if price is above the moving average, let me draw that here. So let's say we have, let's do pink for price. So we've got price like this. There you go. And let's say we have a moving average, which is like this. If price is above the moving average, then theory being, I'll use a different color here, if price were to come down and touch the moving average, buyers come in. That's a very, very typical sort of methodology that people use. They're using the moving averages to help them get into trades. If you're above price and it touches the moving average, you buy. If you're below, or if price is below the moving average and it comes up and touches it, then you sell. It's a very simplistic way of doing it, but that's what a lot of people do. So as price comes down and it hits the moving average, buyers come in. And if buyers come in and we're adding buy orders, we want to be going long. So that's why this criteria is over the moving average, so that we're going to have opportunity to be able to go long. If price was, let's just do this a second. If price was, again, let's just say we have the moving average. If price was below the moving average, so the moving average is our yellow line here. If price was below the moving average, so it's here, then if price were to come up and hit the moving average at this point, sellers would come in. So we don't want to be looking for long opportunities if price is below the moving average. Because if price is below the moving average and then it hits the moving average, sellers come in. So why would we want to buy when there's loads of sellers coming in? It's more likely to go against us. So that's why we're looking for that there. And you'll notice when I show you the other scan, it will be the reverse of that. So again, we're looking for closes above the exponential moving average. Now, this last one, to be honest, I'm not exactly sure what that does or what that means. But point being, we have different criteria when it comes to what we're looking for in these scans, and it makes it so much easier because all we have to then do is click run, and it will just do a quick. It depends on your internet and depends on your systems how long it takes. But let's say it takes 10 minutes. You can do that in the morning whilst you make yourself a cup of coffee. By the time you've come back, you've got a list of stocks to look at. So I'm going to click on the one below just while that's running to just show you what that would then look like. So this is a scan that was done a few days ago. It's not actually relevant anymore. I'd have to click run again in order to show this to be relevant. But notice what this has done. Out of thousands of stocks you could look at, it's gone, right, what are the stocks that hit this criteria? Here you go. Look at these ones. So these ones in this example, at the time when I did this scan, would have been probabilities to the downside. So let's just click one and just see whether that works there. Yeah, it's a little bit outdated. So this was probably done really yesterday when we had a thick red dot. But in general here, what we'd be doing, let's just assume that these do sync up. I don't want to run it again and then it'll take a little bit of time. We'll see if this is done by the time we finish and we can come back and show you here. But let's say, for example, we've just run that scan, and all that's changed with this scan, by the way, for looking for short opportunities, all that's changed, same close, same volume, same options criteria for these things. This is now below the moving average exponential. So we're looking for short opportunities that hit other criteria. And again, if we click run, then it would come back and show us an up-to-date list of what those things are. Let's assume I've already done that and that this is our up-to-date list. That's then saying to us, these 3 stocks have probability to the downside and are good enough stocks for you to even waste your time on, right? Or spend your time on. So we can then just click on them and it will open up. It's all linked to your other charts and things, and it will open up. She says it'll take a little bit of time now because it's working hard in the background. It's going to then open up different stocks, so you can then look at that. Now, I'm not saying just because the scan says, hey, this is a good idea, look at it, that we go and place a trade. We would still apply our methodology. So again, let's give an example of this methodology to kind of show you how maybe the scan helped us do this, maybe it didn't, because we've got different things going on. As a quick look, it looks like we wouldn't actually have an opportunity on this one, but this is my point, I guess. So we would still come here and we would still do our usual methodology, and we'd say, what's the autoclimate doing? Do we have probabilities to the downside as far as the autoclimate is concerned? Yes. Thick red dot, probability to the downside, great, look to go short. You could then also look at your stats on your autoclimate. This market usually goes down for 6 candles. I'm just rounding that up. And we're on candle number 2 on a daily chart. So we have probabilities that it continues to go down, at least for another couple of days or a few days, based on what usually happens. So great, checkbox, checkbox. Does that mean that we place a trade and just press sell at any random price? No, we still have other elements of the methodology. We've already checked through the scan that it's even worth looking at. Then we've checked on our autoclimate that we have probabilities, but there's still further things. And in this particular example, it wouldn't have worked out. Now, what we want to do once we've figured out that we want to buy or sell is figure out question number 2, which is, if I sell, where? We've decided we're going to sell. We need to know where we're going to do that. That's where these babies come in. Our AutoUFOs. Our AutoUFOs are showing us where we have big stacks of sell orders, or in the case of the green UFOs, big stacks of buy orders. In this case, if we're selling, we care about the sell orders. We want to sell where there's lots of other selling because it's more likely to beat the buyers and push price down. And if we're selling, that's what we want price to do, is go down. So we would look at our UFOs and go, okay, great, we've got a couple of UFOs here, but there's a third element that we need to think about. We have our EMA value. It's small, but I'll just type that out what it is. So the EMA value is 28.69. That's the EMA value on our daily chart. So you might be thinking, well, hold on, you're looking at UFOs on a 55-minute chart. Why do you care what the EMA is on a daily chart? Remember we spoke about before that when price is below the moving average, if it comes up and hits it, sellers come in. So what we want to do is combine on a bigger time frame where sellers are going to come in, which is at our EMA value, with our smaller time frame stacks of sell orders, because we're adding selling and selling at the same price. And then we go in with those, which means that we have probability of that, or higher probability of that trade working out for us, because we've got more variables going on our side. So with that, we would look at the EMA value, and it was 28.69, which is around about here. Around about there, 28.69. There are no sell UFOs there. Not even close. They're a full dollar or so ahead of that, right? Or maybe 70 cents. So as price moves up, if it does move up from here, it's going to hit the EMA. Even if the EMA moves up a little bit, let's say the EMA is at this point. It's going to hit the EMA but not be hitting other stacks of sell orders. So we have some sell orders, but not enough. We want sell orders and sell orders. Sell orders that are there for whatever reason, and it's shown to us on the UFOs, and sell orders that come in because of the EMA at the same price. If that doesn't happen, we don't place a trade. So the scan has told us this is worth looking at, but it doesn't tell us go place a trade on this. We still need to run our methodology. We don't have enough probabilities, enough variables that are being checked in for us to take the trade. Now, what you could do, you could be somebody that says, I don't care about UFOs, I don't use them, I'll just use the EMA, in which case, great. Just use the EMA. And you can still use the scan to tell you you've got enough volume and enough, it's a certain price, and you've got enough options criteria that are being hit, and you've got probability to the downside based on where it is to the EMA. So who cares about the UFOs, right? You could do that and just sell it at the EMA if that's your methodology. You could use other methodologies to help you decide where to sell it. So you can still use these scans even if you don't follow our methodology. If you do follow our methodology, then you would look at these scans, you would check certain things, you would get to a certain point in the methodology before you go, nope, not good enough, not doing it, move on to the next one. Then all you need to do is just click the next market. That's all you need to do, because the scan's done its job for you to say these are the ones worth looking at. So rather than you having a big long watch list of hundreds of stocks maybe, or you looking for fundamental information on a certain sort of, again, watch list of stocks, or just clicking through randomly, or going online and Googling what stock should I be looking to buy or sell, you use the scan to come back with objective data to say, hey, look at this one. And then you can decide whether or not it's worth your time looking through the rest of your methodology to continue that process. But at least the start of the process is more likely to be something that's going to work out for you than just clicking on random stocks. So let's see if this scan is done. Okay, so I've done the buy scan, that's the one that we just ran. And you'll notice it's come back with 2 options. Out of thousands of stocks, it's come up with 2 options. If I was to then just click on Netflix, which is this top one here, we'll see from this that we have, just move the price a little bit there. There we go, we'll see that we have probability to the upside because we have a thick blue dot that tells us probability to the upside, look to buy. We then still do our methodology. And again, in this case, I'm not sure it would quite work out. The EMA is 540.55, which is like here. There's no buy UFOs around that. If price comes down, it's going to have to go through a stack of buy orders to hit the EMA anyway. Let's say the EMA then moves down as well, so it's a moving average, and they meet somewhere around here, where the price and the moving average come to a certain point. So yeah, you have buy orders here that are coming in for the EMA, but you don't have other stacks of buy orders. And yeah, you could hit your UFO and hit a stack of buy orders, but you don't have the EMA, so you don't have other buy orders. So again, those 2 things aren't lining up. No worries, we click on the next one. So with this one, let's just see, 554. Let's just have a quick look at that. Okay, so yeah, with this one, same situation. So 554 is here-ish. So again, same situation. We have the EMA and the UFOs not lining up together, so not worth placing a trade. Now you might then think, okay, well, I've got two stocks that have come up on this scan, and both of them, for other reasons, end up not being trades that I would put on if I follow this methodology. If you don't follow the methodology and you have different reasons to place trades, then it might have lined up. But what you can do there is go okay, if I go to customize again, what if I look at stocks that have a lower volume, and you could change that? Or what if I uncheck the options ones? And again, just click run. If I do that, it's much quicker because it's not scanning through the options data as well, and it will more than likely, we'll see once it's run, more than likely come back with a lot more options, a lot more stocks that we could look at because it's not going through options data. So again, you can play about with the scans to get you to the right place where you're balancing amount of trading opportunities versus probability, so that you can see again what you're going to do for that day. And hey, if you do some scans and it comes back with 2 stocks and they don't line up, fine, move on, do something else with your day. You don't have to manipulate the data and the scans to have a trading opportunity, and then that way, I don't know, maybe you can just place a trade because you feel like you need to place a trade. If that trade's more likely to lose, why would you do that? Why would you take more time and risk your money on opportunities that have less probability of working for you and more probability of losing you money? I know it feels a psychological need, but it's not something that is a logical thing to do. Now, other ways that you can scan through opportunities is by using the AutoUFOs. We talked about this briefly last time, but I'll just show you that. You might have noticed this floating blue number here. That floating number tells us the percentage of time that price moves between UFOs on that time frame. So essentially it tells you its probability rate. What's the probability that the UFO works, and we define works by, moves to another stack of orders? They could be 1 to 1 away, they could be 20 to 1 away, anywhere in between, anything over, anything smaller. In general, how often does that work? So what you could do is say, okay, based on this number, on this time frame, and you pick the time frames based on different things. I'm just going to customize the AutoUFOs here. And all I've had to do to see that number is put true next to show UFO stats. If I change that to false and click OK, you notice that number has disappeared. So if you don't have that number, just double click on the edge of the box, click yes, and go to show UFO stats and true. Now, by the way, this feature only exists on the TradeStation version. That's one of the reasons why it's a more expensive version than the one on TradingView. You won't be able to do this on TradingView to be able to filter by this. Let's say, for example, you have a rule that says, I want a minimum probability rate of 50%, as an example. Well, in which case, you do the scan, and it's looking at other criteria, and it's showing you, and then you just quickly look at that number. Is that over what I want it to be or not? You don't need to do any more of the methodology. It's another quick way of just eliminating opportunities. Now, you'll notice this number will change if I load a bit more data. So at the moment it's doing 500 bars back as standard. What you want to make sure is that if you are using this criteria as a way to filter, that you are loading the same amount of data every time. Because if I load, I don't know, let's say 200 bars, that number's changed. It went from 51% to 56%. If I load, let's try a little bit of a higher number, let's do 700 bars. That's now gone to 49%. So depending on how many bars I load will change that number because it's using different amounts of data. That's true in anything. The more data you add, the more your averages are going to change, right? So you want to make sure that you are standard and that you stick to the same amount. So for us, we use 500 bars as a standard, which means whatever time frame you're on, it's still using the same amount of data points to give you this number. So let's say your number is 50%, then great, you might look at that trade. If you look at, let's just go to Facebook as an example, just whilst that loads with the scan. So let's say you go to Facebook, you're loading the same amount of bars on the same time frame, and that's now, there you go. That's now 49%. Then you would click on it and go, no, not even looking at it. Move on. Then you might look at Google, or again, you might click another one on the scan. And once that's come back without options data, it might show us a bigger list. And then you go, great, Google does hit my 50% mark. You might have a 60% mark, or a 30% mark, or a 40% mark. Again, that's going to depend on you as a trader. Do you want to have more trading opportunities but less probability? Or do you want to have very few trading opportunities but very high probability? Everyone's going to have different answers to that question, and you're all going to have different opinions as to what counts as high or low probability or whatever. So you can use this as well as a way to filter through the different types of stocks you want to look at, or again, currency pairs. Let's say if we look at euro dollar. If I look at the euro dollar there, the UFOs are doing the same thing. UFOs exist on every chart of everything. So you can just come there and look and say, what currency pairs do I want to trade today? Even if you don't use TradeStation to trade them, because you can't actually trade currency pairs directly through TradeStation, you might still come here and say, if I'm day trading, I want that number on a small time frame to be over a certain percentage. So you might come here, filter through that, look through your watch list and go, do you know what? These ones are below 60% or 50%, 40%, whatever your number is, so not worth looking at. Now you notice here, This scan is now just finished. I was just waiting for this to finish to show you. Now that we don't have, let's just click on that. Now that we don't have options data in it, we have a much longer list. Notice we're just on the A's now, and there's 50 something. So if I was to scroll to the bottom, we've got, what's that? 1,000? Let's just make that bigger. We'll see that. Yeah, 1,004, 400, 500 something. So yeah, not exactly, what would be the word? Not exactly efficient to have thousands of stocks that we want to look at. So again, we normally will add in the options data there to make it more efficient. Now again, notice the difference between that, and that's quite a big difference to be fair. Normally you wouldn't have such a great difference between with or without options data. If you're putting in the options data, in this example, we had two stocks we could look at that fit the criteria. If you take out the options data, then we're looking at thousands of stocks, 1,500-ish stocks that we could look at. It's a really, really big difference. It might normally be that with options data, you get 5 stocks, 6 stocks. Sometimes you get more than that, 10, 12. It might be that without options data, you get a few hundred. Again, tends to be a bigger thing there. But you could, in theory, if you wanted to, let's say you do this, you could just click each of them, see what that number is, and say, I want it to be 60%. And just click through. And not even stop and have a look until you see over a certain number. And you could do it that way, and it could be a relatively quick thing to do. There you go. So this was the first one. I just clicked through maybe 10 or so. This was the first one that hit over 60%. So maybe you go, right, this is the one that I'm going to look at. So again, there are different ways of doing it. Like everything in trading, there are different approaches, different methodologies, different technologies, different scans, different ways of doing it. Hopefully, I've given you an idea of how you could use the scans that we use to whether or not you use our methodology to filter down and make it easier for you to use your time effectively on the trades that have higher probability or that are worth your time. Even if you don't end up placing those trades for other reasons, but at least you're looking at ones in the first place that make a little bit more sense and that have a little bit more on your side. So that's the stock scans. Again, all you need to do if you need them, if you're watching this recorded or live now, you can just email us, support@traddictiv.com. Traddictiv.com. There you go, just about fits. You can email us support@traddictiv.com and we will send you these scans. And again, hopefully you can use this video to understand how you might customize those scans to fit more your specific trade plan so that you don't have to be going through and looking at the data to decide which ones you look at. TradeStation does it for you. And it takes a few minutes to do. Go and make yourself a coffee, come back, and you've got your opportunities to look at for the day right in front of you, without you needing to think about anything, because the technology's done it for you. So email us and you'll get that. So I'm now going to cut the live stream to Facebook and YouTube. Hopefully this has been helpful so far. In the next bit, I will show you the Forex scanner and how we use the Forex scanner as well. So I'm just going to go to Vimeo here. Yeah, so sorry, just seen there from Siderman. I thought, Siderman? Don't know if that's the last name or just or like a superhero name, I don't know. So I thought that the number would change after the pending data was settled. Yeah, it does. You probably noticed that this was 60-something%. I hadn't actually noticed there was a pending data thing on the top left there. Once the pending data went, then yes, it resettled to a different number. So you could click, wait, click, wait, make sure you don't have this pending data thing in the top left hand side, and then yes, see whether or not that number is where you want it to be. That would be a way of filtering through. Oh, hi Mark. So didn't realise from your username there that was you. Cool. So hopefully that makes sense with the stocks. I'll show you the Forex ones now as we cut off. I'm just going to go and get out of these destinations. For those of you joining us on YouTube or Facebook or watching this recorded, hopefully it was helpful. Any questions, you can email me, Becky@traddictiv.com, or you can email support@traddictiv.com. You've also got, just as a quick reminder, tradewithufos.com/Becky, and that will bring you here. You can get yourself a free membership, ask a question publicly, because probably if you have a question, somebody else will have it too, at least probably in the future. So I will leave you guys here and continue in the close room. So see you in the close room in a bit. And everybody else, I will be back on Monday with the sort of pre-market or as the market opens overview. So we'll see you then. Have a great weekend or rest of your weekend, and I'll see you next time. Okay, so I just need to turn these off one by one.